But how will these overnight cues impact our own markets? We have our research team to tell us just that. A lot of domestic cues as well that we'll be watching out for. Our research team is joining us, Vivek, Surbi and Nigel. A very good morning to all of you guys. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. It's very mixed. India has actually closed yesterday for upwards for the sixth straight session, while when you're talking about the overnight cues, extremely weak has come in, especially from the US markets. US markets ended lower for the second straight session. The regional bank continued to see quite a sharp sell-off in yesterday's trading session. European markets too followed Q, and you actually saw most of the key indices ending with cuts between 0.5% to almost 1.3%. Crude oil prices yesterday saw a very sharp decline. This is multiple worries coming in as far as the crude oil front is concerned. Brent futures ended lower by over 5%, and WTI futures too ended lower by 5.5%, coming in at the $71.6 a barrel mark. Now, when you're talking about the Indian markets, like I mentioned, gains for six trade sessions. FPI selling continued to remain quite robust. Yesterday's trading session, you saw quite sharp moves coming in as far as IT as well as the metal pack that actually supported the markets. But today, quite a few important cues to watch out for. Markets will react to the results of Tata Steel. Important results like Titan 2 will be declared in the session today. Also, we'll have to keep an eye out for the entire aviation pack. Go First insolvency is significant news. So, you'll have to watch out for aviation names like Interglobe as well as SpiceJet. You'll have to watch out for the Wadia Group companies like BBTC and Britannia, and also lenders that have exposure. So, all of these will remain in focus. Asia, along expected lines, is given a weak opening. SGX Nifty 2 is indicating a muted start for our own markets.
Yes, it's a muted start that we are expecting, 85 points lower on this one. But of course, a lot of cues in terms of stock movements also. Surbi is here with the list of stocks to watch out for in today's trading session. Surbi.
Hi, good morning. Thanks for that. So first on my radar is Ambuja Cements. The numbers were better than the CNBC-TV18 poll. The revenue came in at 4,256 crores and margins came in at 18.5% versus a poll of 17.8%. Next is Tata Steel. Again, the numbers were better than expected and the losses in the Europe business have contracted. The revenue came in at 62,961 crores and it reported a margins of 11.5% versus a poll of 9.8%. The PAT came in at 1,566 crores. Home First Finance, the healthy business momentum continues due to strong customer acquisition. The net interest income was up 35% on a year-on-year basis and the net interest margin came in at 6.1%. Spandana Spurti, again strong set of numbers, and their sale of NPS to ARC also aided in stress reduction. The disbursals were up 120% on a year-on-year basis and the net interest income came in at 329 crores, up 104% on a year-on-year basis. Fino Payments, the total income was up 13.4%, the EBITDA was up 46% and the margins came in at 13% versus 10% same time last year. KEI, the numbers were pretty much in line with expectations. The revenue were up 9%, the gross profit margins came in at 26% and the EBITDA margins came in at 10.4%. Other than that, we'll be also watching out for Titan, Godrej Properties, Havells and ABB India as they'll be reporting their numbers today.
Okay, that's a long list, Surbi. Thank you so much for getting us up to speed. Finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. Yesterday we had the Nifty Financial Services Index that played out its weekly expiry. So the intraday chart will tell you the final 30 minutes drop that we saw on the banks as well as financials. That's because of the weekly expiry that played out. But the FIs, boy, oh boy, how they have turned things around. They added long positions and they added long positions big time. More than 22,000 contracts is what they added on the long side. And now they're net long on the index. Well, I haven't got a chance to say that all the way since January 24th. So, bulk of that short covering has been done. Just take a look at it. Imagine from 91% a month or so ago, it's come down to around, 49%, or that's the short positions. Now, on the option side, well, they were buying some calls. But the problem really with this market is they're hedging themselves because they're writing calls as well. That's giving you a sense that higher levels, we're likely to see some bit of supply that could come in, given the kind of call writing that we're seeing. And this is after a while. 50,000 call contracts is not a small amount. Now, if we're looking at, the Nifty yesterday, we did well. But the index, India VIX as well moved higher. Now, that's a bit of an ominous sign as we've seen in the past, because normally they work, they don't go in the same direction. On the option side, the 18,200 call, well, that was getting written aggressively yesterday. It added more than 40 lakh shares odd, and the total open interest there is closer to around 1 crore. Even the Nifty Bank side, the 43,500 call, well, that was very, very active, which brings us to the levels. On the upside, the bears are positioned such that the 18,250 level does hold out. While on the downside, 18,000, 18,050, that should be a bit of a support zone. If that breaks, then you're looking at the 100 DMA. For starters, the SGX Nifty suggesting a bit of a pullback. Back to you.
Okay, all right. Thank you so much for that, Nigel, Surbhi and Vivek. That's the power prep for the day. Time for a short break now. When we return, Tata Steel reported a good set of fourth quarter earnings. We'll line up all the highlights on the other side. Stay tuned for that.